Monday's market closes sharply higher in the livestock, mix to lower in the grains. Arlen Sunerman with StoneX Group is joining us. Arlen, let's talk about the grain trade. A risk-on day in the outside markets, the dollar index sharply lower, but we really didn't see the grain trade respond to that like we thought.
Yeah, the VIX is still high, and when the VIX is high, it means fear on Wall Street's high, and these grain markets are considered riskier assets, and it's very difficult to get fund managers to put money in a riskier asset when fear levels are high. Probably going to be in that type of situation for a while longer until things calm down on Wall Street about the U.S. economy and the global economy. That's a big fear right now, is that we're going to go into a deep recession, reducing demand for commodities. We have seen the grain and oilseeds try to break away from that tendency a little bit more in the last few weeks. We need to be able to see a little bit more of that to be able to sustain a rally.
Export inspections didn't help either. Very poor on corn and on wheat. Now, soybeans over 69 million bushels. But are you concerned at this point because of the slow traffic on the Mississippi?
I really am. Obviously, shipments to China accounted for most of those soybeans, and the overwhelming majority of those went through the Pacific Northwest. It's just really expensive. We've been forcing China, because of the high cost of U.S. soybeans, because of the low water levels, has been going back to Brazil to find what they can there among their tighter supplies. And they've been buying more from Brazil, buying more from Argentina, and that's really hurting our business. And they're releasing more from their reserves as well, making available about a half million metric tons per week. And it's really too bad because right now crush margins are very, very good in China. Feeding margins are good for hogs right now, and it's too bad that we're having trouble competing.
So let's talk a little more about China because we do have the elections coming up here. Talk about what you expect out of that and just the overall tensions between the U.S. and China right now.
Yeah, I think it's a foregone conclusion that Xi Jinping will get an unprecedented third 5-year term to continue leading. The Congress finishes meeting on Saturday. So far, the statements coming out there are showing the increased tensions, and I think basically near an all-time high right now. One of the reasons for that is Washington released a 48-page paper a few days before the Congress stating that China was our biggest international threat. We've also seen congressional action lately to really clamp down on technology going to China, and China saw that as a direct threat to them as well. Maybe it needed to be done. I'm not arguing with that. But it's just increasing tensions. And then China, during the Congress, also making very strong statements. Some observers say the strongest on record for a Congress meeting about Taiwan and their commitment to reunifying, their words, Taiwan to the mainland.
So the other geopolitical thing we're dealing with still is what's going on in the Black Sea region. Do you anticipate that we are not going to get an extension of the grain corridor, the export corridor?
I remain very skeptical that we're going to do so. I know that Ukraine came out on Friday making a statement after their meeting with the United Nations and with Turkey that they were very convinced it was going to happen. But the other party involved is Russia, and Russia continues to protest the agreement. And it's really not serving Russia's interests right now when a lot of other things are going against them in this war. So I remain skeptical whether they're going to do it. I'm preparing for the possibility that we're going back to just land shipments going forward after November 22nd.
So what do you think about the wheat market itself? Does it have enough war premium in it, especially because when you look at the stocks for this last WASDE, we're looking at 15-year lows.
Yeah, particularly when you look at those just export customers, especially when you exclude Black Sea wheat. And the real question is how far is President Putin going to go to try to turn the momentum back his way? He's mentioned quite a bit about the possibility of strategic nuclear strikes. I think we would all say the odds of that are fairly low, but just the fact that they get talked about as a possibility means that the market has to maintain some risk premium. So is there enough risk premium in there? Not if he would actually do it, because that could contaminate a lot of ground and possibly grain in storage. So that's a big concern still hanging over the market, making traders reluctant to be short the commodity.
I'm going to circle back around to corn and beans with my last question on the grain. So we're kind of range bound here. We get above 7 on corn, we get above 14 on beans, and it seems like we either get profit taking, farmers selling, whatever. Do you think we're going to stay range bound for a while?
Well, I think corn's going to be tight for quite some time. That leaves us vulnerable to an even smaller crop going forward, and the possibility of needing to do more rationing. Beans, I was fairly bearish on because I felt like we would just have enough beans to get us to the South American harvest, and then they would have a big crop, 26, 28 million metric tons larger. But late last week, the long-term forecast model started to flip much drier for Brazil. They've always been dry for Argentina. And so that does raise a risk. If we continue to see this expectation of a dry November and December, then Brazil's production could come in much smaller. That would be much more supportive for soybeans if that happens. We'll have to see if that verifies.
So a nice rally in both cattle and hogs today. We've got December live cattle back above the 100-day moving average. Funds have liquidated a lot. So do they come back in here? Are they the ones pushing this thing, and do they keep doing that?
Yeah, and one of the keys is going to be Friday's cattle on feed report. This report is expected to be where we finally start to see placements drop below year-ago levels because of the cow herd contraction that we've seen over the last year and a half plus. And if we see that happen as expected, then we're going to see supply slowly start tightening into next year.
What about the hog market? Is that fund buying as well here now, or do you think, I mean, cash has started to improve, the lean hog index is starting to bottom, and then we hear about these really record high prices for pork in China, and, you know, are all those things kind of simmering?
Yeah, we've seen exports really pick up, really, especially over the last 4 to 6 weeks, and China's been a notable part of that. And I think if we continue to see that, we can see more prices because the slaughter numbers are coming in below expectations.
Yeah, no doubt. Down like 85,000 on last week's kill from the year before. All right, thanks so much for joining us, Arlen Suderman with StoneX.